Refinancing your mortgage can save you hundreds of dollars a month and thousands of dollars over the course of a year. With mortgage interest rates at an all-time historic low as of the recording of this live stream, the real question is, should you refinance your mortgage? How would you know if you should refinance your mortgage? And will it even make sense to you? Or do you want to cash in on the savings that you can get from mortgage refinancing? To tell us more about this, joining us live today is Bill Merren with New American Funding here in Las Vegas, Nevada. He's going to share the ins and outs of mortgage refinance with us, some tips that you should know, and how it works in practice. I'm your host, Andrew Finney with King Realty Group in Las Vegas, Nevada. Now, let's bring Bill up and let's get after it. Good morning, Bill.
Good morning, Andrew. What's going on, buddy?
Hey, thank you so much for joining in with us today. I know that we have an exciting time talking about mortgage refinance. It is a very popular question out there, and it's something that can realistically save people a lot of money. The real question is, when does it make sense and when doesn't? So why don't we lead in with what's going on with right now, just mortgage rates?
So, Andrew, man, it's an exciting time right now. I mean, historically, rates have never done what they're doing currently. I mean, the rates are very, very low. This morning, the rates opened up a little bit better. As far as the pricing goes for these rates. I mean, we're locking in rates on VA rate reduction loans at, anywhere from 2.25 to 2.5. And then we're locking conventional manufactured loans at 4.25, so it just depends on everybody's situation. But the rates right now are really good. We're getting a kind of a recommendation to float interest rates right now, just maybe over the next couple of days or so. We are seeing a slight improvement potentially coming, especially over the next 30 to 45 days. We could see a slight improvement. However, there is, again, any comment that's made on either side of the aisle on this topic regarding the economy and things that are going on with COVID and vaccines, no vaccines, going back to school, masks, all the craziness, right? Things can really swing the rates pretty drastically. So, again, the rates are very good. They have improved a little bit, but it's definitely a volatile market.
Yeah, and you were sharing with us a moment ago that you're seeing rates as low as 2.25 and 2.5 on a VA interest rate reduction loan.
Yep.
And conventional, what would that be, about 2.875 right now?
Yeah, we're locking them 2.875. And again, just conventional is all about credit score, man. As you know, we've talked about that a lot. If somebody comes in with a 620 credit score, not that much equity, they're not getting below 3%. Conventional rates are all about credit score. So once you have a 680 and above, 700, really 720 and 740 plus, you're going to get those top tier rates.
That makes sense, and I appreciate that update. Now, I do want to talk about a mortgage market update because this last week we were helping a gentleman with a jumbo loan. And I think it's important to note how many people can realistically do a jumbo loan. And for reference, a jumbo loan is when you go above the conforming loan amount, which, please correct me if I'm mistaken, is $510,400 right now.
Correct. Yep.
Okay. So that was a really interesting situation with that gentleman, a really cool guy, super excited for him. We were able to get it done for him. But at the end of the day, it was one of those situations. It was interesting to see that not a lot of loan officers provide a 10% down jumbo loan. So I wanted to pick your brain just for a moment and ask you, if somebody's in the market buying a home over that 510,400 marker, what should they know when they get ready to apply, and where would be a good idea for them to apply to get approved?
So yeah, anybody that's in that market, anybody watching this video, if you guys are in that market of buying one of the more expensive properties, it's very important to understand it is not the same world it was 6 months ago regarding the availability of jumbo programs. So 90% of lenders out there aren't even doing it. I personally, for my own personal stuff, I called Quicken yesterday, just kind of wanted to see how they work. And they kind of were like, yeah, nobody does jumbo anymore. We don't do jumbo. Nobody does jumbo. And they didn't know who they were talking to, so it was an interesting conversation. But jumbo is very few and far between when it comes to programs. Now, if you are in that, $600,000 to maybe $900,000 price range, there is a lot of great options for you with the company I work with, New American Funding, and some of the options that we have to where we can help people out for buying owner occupied properties, sometimes second homes, not so much investment properties, but really, primary residences, to where we can go in there and we can help you qualify with 10% down, and in some cases as little as 5% down. And the way that we do that, guys, is by splitting up the mortgages. You do a first mortgage and then you do a second. Now, that second mortgage is depending on what you qualify for, depending on the situation. There is some different options. There is, it's not like you're going in there with 680 credit score and you're going to qualify. I mean, you got to have 640 plus in some cases currently. This is definitely an ever evolving market, man. And I know, Andrew, you and I have talked about this is where we're at right now. If this whole COVID thing, eventually goes away, when it does, not if, but when it does, all these programs are really going to start coming back. It's not going to happen right away, but they will. Guidelines will loosen up. But currently, as it stands right now, we're doing these programs with 5 to 10% down in most cases. Right now, we're able to get people approved. We're able to close them. Now, also important for people to understand with these particular programs, you're not going to be looking in most cases at a 30-day close. If Andrew, you and I were working with a home builder out here, which is great, put out some great product, but there's obviously a beautiful resale market with that. It's very important to understand with these programs, you're not going to close in 30 days. With the 10% down, you're probably looking 45 days-ish. With the 5% down, they're saying 90 days, so it's just a very different kind of world with that. Another thing to talk about when it comes to these programs is obviously with a lot of these individuals buying these properties, they might be business owners, right? That are buying the more expensive homes. And Andrew, this is a totally separate video on its own because it's a very complicated loan to do, but we are doing them. I've got a couple of them approved right now, which other lenders turned down, which is the bank statement loan, self-employed bank statement jumbo loan, to where somebody's got a business that they own through the pandemic, or still solid through the pandemic. They still got their business is growing, their business is consistent, their income is good. They may not actually show all their income on their tax returns because obviously, beautiful country we live in, we get to write off things as business owners, right? So your taxes may not be as attractive as you would like them to be. But if you run your business as a business, which you should be, and you have business bank statements for 12 to 24 months, there's a very good possibility we might be able to do a jumbo bank statement loan for you. Now, again, due to the pandemic, due to guideline restrictions in the market tightening up, this is New American Funding's program. This is in-house. This is something we do. We underwrite it, we close it, we fund it, we do all of it. Currently, that program requires a minimum of 25% down. 3 months ago, it was 10% down. So again, as time goes on, and people are going to be watching this video later, months down the road, potentially even years down the road, reach out to me, see what guidelines have changed. But as of right now, 25% down is what you're looking at.
Good stuff. Good stuff. And thank you for those updates. I know we went down a little bit of a rabbit hole right there, but I think it's important to keep stock of what's happening with the mortgage market and the rates. So it's great news that if you are a veteran or an active duty personnel, that you could get as low as a 2.25, 2.5 is what you're seeing right now. And if it's a conventional, a 2.875 to 3. Now those rates are absolutely smoking low. It's better than my own rate. I don't know about you, Bill, but it's better than my own rate. And I'm like, hey, should I be refinancing? Which actually is a perfect segue into our hot topic today, which is, should I refinance my mortgage? Now, Bill, different things come to mind with a mortgage refinance. Number one is like, what are some of the pros and cons, and how would you know if it even made sense to do it? What is like the litmus test from your point of view as a loan officer to help somebody determine if a mortgage refinance makes sense at the end of the day?
Yeah, I think the first thing to do is really not look at this as a loan officer. I think is to look at it as a consumer, right? Because us as consumers, Andrew, I have a mortgage, you have a mortgage.
Yeah.
The first thing to understand is don't just jump on the first piece of junk mail that you get in the mail because they're offering 2.99 and call these people, right? Most of the time, a lot of these companies are not fly by night, right? But it's a different type of lender. They're just a call center. You might reach an employee who's got not a ton of experience. Like again, my own personal experience yesterday, calling Quicken just to see what they offered. The girl had no clue what she was talking about. Very nice girl, very just great customer service, but as far as guidelines, she didn't know. So the first thing I think is just very important to kind of something you and I talk about, and to just take a breath, right? Just step back, okay, look at it and say, okay, cool. Hey, these rates are historically low. I see it everywhere. It's marketed everywhere. Let me contact maybe, a good resource. If you don't have a relationship with your loan officer that closed your last loan, reach out to me, see what I can do, but also reach out to your real estate professional, because they're a great source of getting in contact with a lender who knows what they're doing. Now, when it comes to the refinance junk mail that you're going to get, you got to read that fine print, because a lot of the times, that fine print shows on there, hey, this 2.99, it's also including 2 discount points, which is 2% of the loan amount. And if you have a $300,000 loan, that's $6,000. Hey, that might make sense for you. It might not, but that's how they're able to advertise that. And sometimes it's a 2-point discount point cost plus a 5-year ARM, not a 30-year fix like what you really want to be on. So super important to really understand what you're taking a look at and what you're seeing, especially online with all these different online advertisements. But it is a great time to look into seeing if it makes sense for you to refi. The reason I will,
I was going to say, well, when you're talking about when it makes sense, I want to give it for
Yeah,
reference to make it easier, right?
yeah,
Let's say that somebody had bought a house in like 2016, 2017. And let's say back then the rate that they were able to achieve was a 3.5 or a 4, which was completely normal back then, right?
yeah, yeah.
So if rates right now on a conventional loan could potentially be as low as a 2.875, one of the questions that would come to mind, how low would a refinance rate need to be able to think, hey, you know what, this is actually going to save me money. At the end of the day, it's going to save me hundreds of dollars, and it's going to save me thousands of dollars over the course of a year. So it's going to lower my monthly expense of home ownership, right? So
Yeah.
what would you suggest? So let's say that, again, somebody had a 4% rate. Let's say
Yeah.
that the rate that they could achieve was 3%. Does that make sense?
Absolutely. So it should, right? That's kind of not a loaded question, but that's a complicated answer because everybody's situation is different. You got to ask yourself, why am I refinancing? Am I refinancing just to get the lowest rate and save as much money every month as I can? Some people right now, I'm refinancing that they actually got a really good interest rate when they originally refinanced, but the last several years they went out and they went into tons of debt. They got credit cards, they got razors, they got boats, they got all these different things,
Mm-hmm.
and they're in a bind, right? So depending on why you're refinancing, if you're refinancing to consolidate some debt, I just helped a gentleman recently. He did a cash out refinance. Didn't take a bunch of cash, but he used that cash out to pay off a ton of his debt. His rate dropped. He was at 4.25. He only dropped to, I think it was 3.875 because his credit wasn't the best and he was doing a cash out, which the rates are a little bit higher. But that brother man saving $900 a month by paying off all that other debt, and now he can breathe, right? So it just depends on why you're refinancing. Typically, if you're doing it just for interest rate, I like to kind of the litmus test is you should at least be a half a point, right?
Mm-hmm.
If you're doing it just for rate, you should be at least a 0.5% to do that refinance. To have it make sense. You don't want to do it for just a quarter, right? Most of the time. And you also got to look at what your end game is, right? If you are, if you're 17, 18, 20 years into a 30-year fixed loan, you're getting ready to retire, and you're dropping your rate a point and a half, 2 points, and your payment's going down $500 a month. Even though you're going to be starting over that 30-year cycle again, you're going to be saving a ton of money every month. And if you wanted to, you could apply that back on the mortgage or put more into retirement. So everybody's situation is definitely different.
So, Bill, I noticed that one of our tribe members, obviously asked a question a moment ago, and I want to clue in a little bit because it gives an example of a real world situation of what people are experiencing and the thoughts that they have. Before I do, Kathy Martinelli, thank you so much. Kathy says, hello, tribe. It's going to be a great chat. I look forward to the information. Kathy, always appreciate you and your support and really appreciate you joining in on today's live stream. I know we were planning on going live on Monday, and then it really quickly disappeared whenever Bill and I weren't able to align the time frame. So my apologies.
My fault.
My apologies, but we're back now and we're able to make it happen and still get the information out. Now, Kathy, again, thank you so much, my friend, for being here. You are a great member of our tribe, as is everybody that's watching both during the live and after. And I just want you to know from the bottom of my heart, I truly appreciate you and each of you. Now, Ilya. So Ilya says, hello, Andrew. I bought at a 3.5% rate in May of 2019 with a 15-year fixed at 20.5% down. I plan to stay for about 5 to 7 years plus. What is the rule to determine a go signal to refinance? This is what's on everyone's mind. So what would you share with
Great
Ilya?
question. Awesome question. So you've only been in the house a year. You haven't been paying down interest for the last 10 years. It's only been a year. Mm-hmm. Your rate is definitely high for a 15-year fixed. As long as you didn't really indicate your credit there, I don't think. No. So as long as your credit is decent, as long as your credit's pretty good on conventional, which I assume it probably is because you went conventional.
What does that look like before you continue? What is a good credit score? When you say that word good, define it.
So top tier rates, you're looking 720, 740 plus. Good rate, 680 plus. Below 680, maybe you shouldn't refi unless you have to. But the rates I'm going to talk about are for 720 plus. So I just helped a very good buddy of mine that I've known since high school. He reached out to me because of some of my Facebook posts and some of the different things I do. And I helped him refinance to a 15-year fixed. He paid like 1/4 point, very, very minimal. And then we got his rate down to 2.5. Mm-hmm. And he was on he was in a very similar situation as you. He actually had just refinanced with his current lender, one of the big companies you hear about. And we saved him a ton of money in long-term interest paying it off. So he literally didn't really put anything back as far as how long it's taking to pay it off. He saved a bunch of money. It makes complete sense. So Ilya, I recommend definitely reaching out and seeing what we can do, because again, 3.5 is not a bad rate. If your credit is good, like I mentioned, 680 and above, maybe 720 plus, absolutely. We should definitely look into seeing what makes sense for you to refinance, because 5 to 7 years plus, you're going to save that money. And if you end up, converting the property to a rental, who knows what happens? You can convert the property to a rental property. You might end up keeping it, or if you sell it. That's some things we'd have to kind of have a conversation about when we go over everything.
Ilya did tell us that Ilya has an 800 plus, so definitely would make a lot of sense then for you, Ilya, according to what Bill's saying. And I'm glad that you raised the question, because when you're talking about this and some of the stuff that Bill said a moment ago, look, obviously Bill and I work together a lot, and we're constantly talking every single week. So Bill's been telling me, look, I got a 3.25% rate on my house. To me, that's smoking low. It's great. And I've been in my house, the house that I have now, that you see around you, right, for the last 4 years. And when we talk about it, Bill and I have a different look at it in a way. And I want to highlight it because it's how I look at it, right? And you got to remember that when I was active duty during the time that I could attend night school, I was going to school to be an accountant. So I sit there and I peel back numbers. And there is something that needs to be taken into consideration. And it is a harder hitting question, right? And it is a harder hitting point. And to me, it's whether it makes sense or it doesn't make sense, right? Now, just full disclosure here, Bill did tell me that with a VA, that's my loan type, a VA as a veteran, that he could get down, I think he said like a 2.25, right? Because of my credit score and everything else. And it would save me approximately $350 a month if I refinanced. It was the approximation that you gave me. So what I did is I sat there and looked at how much money in terms of interest and total mortgage payments that I've paid towards the mortgage that I have presently on the 30-year fixed rate mortgage at 3.25. And I determined that amount was over $100,000 and not including additional payments. So then I started looking, okay, if I was saving $350 a month, that's $4,200 a year. How long do I need to be able to recoup the savings off of the new rate and going back to a 30-year fixed rate mortgage again? So to me, because I've been putting a little bit extra money in every month and every quarter as I'm able to help pay down my mortgage balance, it didn't make a whole lot of sense right at the moment. It makes sense, but not quite as much sense as I would have liked to see it make at like maybe 600 plus a month savings, right? And maybe that's just me being silly, but at the end of the day, that was the thought. Now, believe me, with these rates doing what they're doing, I'm watching them and I'm thinking, it might not be a bad idea to go ahead and do it, because it will shave it down. And there's nobody that tells me I can't just continue making my additional payments to hurry up and get that interest down by making those additional payments to principal. And I think it's worth noting that, because when you look at mortgage refinance, you really got to take it in the stock. And that's why I think with Ilya's case, being that Ilya purchased in May 2019, in my humble opinion, and please correct me if I'm wrong, Bill, or if you have a different thought here, I believe that if you're going to do a mortgage refinance and the rate really makes a lot of sense, one of the first ways of knowing, hey, if the rate was that much different from Ilya's case at 3.5, and now they can get, let's say, a 2.875 or 2.5 on their home loan, right? That's absolutely going to make sense, because they're only a year into the house. They haven't had the opportunity to shell out all that money on the principal and on the mortgage interest at this point, right? Yeah. So in other words, a time frame is like the first 1 to 3 years is what I was kind of thinking makes a lot of sense, because first 5 years. So I'm right at that threshold then at just over 4 years. That's like, hey, I need to pull a trigger or just bite the bullet and just hold my tongue. The next time makes sense whenever, if things happen in people's life and they need the additional cash flow. So refinancing when the rates are low, that's a big one, going back to your point of consumer point of view.
Yeah, that's the biggest thing right now that we're seeing. People are refinancing because of everything, all the craziness that's going on. People are wanting to put themselves in a better position to save, to get lean, to be able to reduce their outgoing expenses. That's the biggest reason we're seeing people do it right now. I'm seeing some debt consolidation. People, for the most part, I believe from what I've seen, most of my clients and people that reach out to me have been a little bit smarter than they were in 2008 and 10. People didn't go out and get all crazy. But they are wanting to save money, right? So they're not really cashing out a ton. Some people are doing some home improvements and paying off some debt. But for the most part, we're seeing people just capturing these just crazy, crazy low rates. And I love your mindset on that, Andrew. That's awesome, dude. I mean, that's a great kind of way to look at it, a different perspective. And it's just everybody's situation is different. If somebody truly does want to free up that monthly cash flow, then, looking at these refinances might definitely be a good situation. And I don't tell everybody to refinance. I had a lady call me, it was about a month ago, and she, with her situation with coming up on retirement and everything she had going on, I recommended that they didn't refinance. Even though I could have saved them some money, her home was going to be paid off in 5 years. She didn't really, her rate sucked. It was like 6.5%. But she didn't need to refinance because she's making extra payments. She'll have it paid off very, very soon. And she would just have started that whole schedule all over again. So again, it doesn't make sense for everybody, but I would check, I would look and see really truly what your options are. And here's Andrew, this is a huge pet peeve of mine, especially in this refinance kind of boom in this market, man, is so many people right now I'm hearing, because a lot of people, man, a lot of my clients, the biggest thing is word of mouth for me is where I'm getting most of my business. They're bragging about their rate that they got because of how freaking unbelievable they are. However, there's a small percentage of people that, like, I recommend they don't refinance because it doesn't make sense for them because of their individual situation, which I can't share with anybody except for them, right?
Right.
Sometimes these people go and they recommend to all their friends to not refinance because it doesn't make sense. I just want to urge anybody watching this video, if you have questions about refinancing, I would love for you to contact me. I would love to be the one that you go to and talk to about that, to get an honest answer where you're at. If it's not me, call someone else, right? Call a professional that knows what they're doing. Don't always go off of just what your friends and family recommend. I would actually call somebody that this is what they do for a living, see if it makes sense. And if it does, cool, rock on, we'll make it happen. If not, sometimes you can't really take too much stock in what friends and family say if that's not what they do for a living.
It's a great point. We all have a different profession. We all have a different skill set. And I, for one, would not want to be my own doctor because I would mess myself up because I'm not trained in the ways of a doctor or an attorney, or, you know what I'm saying? So everybody has their profession, and when they become top notch and they put in their time and they paid their dues and they've learned the lessons, the good and the bad ways and all in between, to educate and really learn to be as successful as you are as a loan officer, then you know that you're getting sound advice from thousands of mortgages that you've assisted people in getting, from purchases to refis to new home construction to all kinds of different home loans. So I think that's a very valid point. And one of the ways that I like to think about, when back to the point I was making a moment ago about my own personal mortgage, right? Is one of the things that I think about is when somebody asks me, and I always tell them, look, I'm not a loan officer. You can chat with Bill. He'll review it with you. But if you're asking me just as a person what my opinion is between like a 15-year mortgage and a 30-year mortgage, I generally will opt the 30-year route because nobody tells you can't pay off your mortgage faster. In most cases, I haven't seen any loans originated in the last 7 years that I've been a loan officer, see, now I'm calling myself a mortgage officer. Oh my God. No, I'm not a mortgage officer, just to be clear. As a real estate professional, I haven't seen that happen where somebody that they would incur a prepayment penalty for paying it off early. The reason I'm bringing that up is with a 30-year mortgage, you have the option to pay it off faster, but you have the comfort of knowing that your amount of your monthly mortgage is at a comfortable level. So when going back to that refinance situation, it's almost the same thought process in a way. Even though you're going to reset the clock, you don't have to cash out and reset it at the same balance you initially had. You can reset it at that exact amount that you owe on your mortgage at that time, which helps you save even more money by doing that, as opposed to doing like a cash out refinance, which, you know, anybody that watches the different videos I have out about this topic, look, I'm not a big fan of a cash out refinance at all, because too many people get that money in the bank. It burns a hole in their pocket. And now they're out there buying themselves a Rolls Royce or a mobile home or something like that. And I always say, hey, if you want to live in it, because if you can't pay your mortgage, you're about to live in it. So I hope whatever you bought was worth it to you. So, I mean, that's the reality. But when we're talking about a monthly cash flow position, it makes a lot more sense, because if they refinanced and they were saving, let's say $350 a month, you could just keep throwing it down because you're already used to it, and throw it right down on the principal and start mitigating that time frame that I was talking about for that break even point by offsetting the interest, paying it off faster. Does that make sense?
Yeah, and Andrew, again, man, everybody's situation is different. I love the mobile home.
Well, mobile home.
I think you meant RV, dude. I think you meant RV.
Mobile home, RV, dude. People tell me all these things. Oh, Andrew, I'm going to buy this house. I'm going to cash out and refinance. I'm going to buy me some land, and it's going to be my backup plan with a mobile home, and I'm going to get solar, and I'm going to go off the grid. I'm like, it actually costs a lot of money to get off the grid. Just saying.
It does.
If you're going to get off the grid in that matter. So.
So one thing to think about, and I know you expressed kind of how you feel about the situation, and I think that's what I usually recommend for people that are, refinancing or even buying a lot of times, because a lot of times people see these rates for a 15-year, they're like, oh my God, I want that rate. It's definitely sound advice to really consider what you said, Andrew, because it's true. I mean, you have the flexibility to pay it off early if you go with the 30-year. You have the flexibility to just keep it at the lower payment, if you have a bad month. Again, everybody's situation is different. There might be people that when you're looking at refinancing and you're considering a 30-year versus a 15-year, right? If your current 30-year mortgage, believe it or not, Andrew, there's still a lot of people out there in the high fives, low sixes. They got 30-year loans. They've had them for, 7 years, 8 years, things like that, to where it does sometimes make sense to flip over to a 15. I had a guy about a month ago. He was, I believe, 6.25, maybe 6.5. We refinanced him to a 15-year loan. Didn't do any cash out. Just did a straight rate and term refinance. Flipped him over to a 15-year. He was only paying about $120 more a month, so his cash flow stayed about the same. That brother man's younger than me, and now he's going to have his loan paid off in fraction of the time. He's on a fixed income. He knows what his income is. He's good to go. And so for that individual, it did make sense. So again, guys, every situation is different. I would, Andrew, if people are looking at refinancing, man, the biggest thing is let's run your credit. Let's see where you're at. Why are you refinancing? I think is the biggest question to ask. And then that way we can kind of go down and guide down the path of, should you do it or shouldn't you?
Well, Simon Sinek likes to say, always start with why and to ask questions, right? No, it's a true story. And I think it's a great point, because you always got to start with why. It's the same thing I love asking people when they're getting ready to buy or sell a home. Why do you want to buy or sell a home? I'm not trying to be an interrogator by any means. I'm trying to understand, because if I can understand what somebody's important to somebody, I know how better to help them. The next question when it comes to buying a house is, how long are you going to live there? And I think that starting with those same two questions as it pertains to refinance is also an important question. Why do you want to refinance? Are you looking to get, bragging rights for a low interest rate? Or are you actually looking because you want to save monthly cash flow, right? There's a difference. And then the second thing is, how long do you plan on living in the house? Like Ilya has a very definitive plan earlier when Ilya shared with us about 5 to 7 more years, they want to live in the property, right? That's a definitive plan. They know the reason why, and they know how long they're going to live in a property. And then they can balance it out from there. So I think that's critically important when you mention that. And I'm glad that we're talking about it. But always start, like Simon Sinek, right? Always start with why. Now, I did notice that Praveen made a comment. And Praveen, thank you for joining us, by the way, my friend. And Praveen says 30 years to 15 years over a 10-year. The amortization schedule getting reset is also something I feel should be taken into consideration. A lot of lenders never tell this. You're right, Praveen, and that's one of the reasons that I wanted to share it, and it's one of the reasons I enjoy live streaming with Bill and making videos with him, is because we can have an honest conversation about it. And the live stream format such as this gives anybody watching during the live stream the opportunity to ask the questions real time. And if for some reason, you're watching this after the fact, of course, then just post your comment in the comment section, and then we can take a look at it from there too. We're looking at everything. And I think that we should be talking about it, Praveen, because you got to understand the overall cost of a refinance, which actually brings up another point, Bill, that I wanted to share with you and get your perspective on. So that's actually, when we talk about mortgage refinance, what are the differences between a refinance rate versus a mortgage rate for a typical purchase? Is there a difference? Are they the same? What should we know?
So depending on the type of loan that you're doing, yes, they can be different. VA refinances versus VA purchases depends on if you're doing a cash out VA or if you're doing just what we call a rate reduction VA. So if you're doing a rate reduction VA, interest rate reduction loan, the rates are going to be a little bit better than your purchase even typically, is what I see. Cash out is typically a little bit higher on VA. Across the board for most loan programs, cash out is going to be higher. Now, if you're looking at FHA, FHA purchase versus FHA refinance is going to be typically about the same.
Okay.
Most of the time, and this is something we didn't talk about, Andrew, I'm glad I just reminded myself, but a reason to potentially refinance, a huge reason why people are refinancing, I'm sorry I forgot this earlier, is switching programs from FHA to conventional, because FHA, PMI. So your private mortgage insurance, your mortgage insurance that you have on that loan, a lot of the time, is going to be on that loan for the life of the loan, or it's going to be on there for quite a while. When you refinance from FHA to conventional, as long as you have the equity there, that PMI is going to totally go away. So PMI would just be would be able to get washed out if the equity is there. So sorry to go on that tangent, but
no, please do. But as you do, please understand that, hey, you're using lender jargon here. So you're talking about MIP and PMI and ARMs and everything else. I have an ARM bill for reference, but it's not what you're talking about. So PMI is private mortgage insurance that is associated with a conventional loan. MIP is mortgage insurance premium that is associated with an FHA loan. And when Bill mentions ARMs, he's referring to adjustable rate mortgages. So Bill,
correct.
Now please continue, because that's a very, very good point that you make, is that FHA loans have that MIP, that mortgage insurance premium, that does not drop for the life of the loan, right?
Correct. Yeah. So that's a big benefit to refinance from FHA to conventional. Huge benefit that we're seeing. To go back to what we were talking about before, the rates on conventional, it really depends on what you're doing. So if you're doing a rate and term conventional refinance, again, guys, conventional is all about credit score when it comes to purchases, right? When it comes to refinances, it's about credit score and loan to value. If you've got a lot of equity, loan to value is the loan that you have versus how much the home is worth, right? The loan to value, if the loan to value is low and you have a very good credit score, typically, even with cash out, what I'm seeing right now is there's no difference in rate. You're still going to get a great rate. If your credit score is not that great, meaning if it's below 700, especially below 680, and you're doing cash out, your rate's not going to be too sexy at all. But again, ask yourself, why am I refinancing? Why am I pulling cash out? When it comes to just a rate and term refinance on conventional, meaning no cash out versus a purchase rate, your conventional rate's going to be about the same as long as you're below 80% of what your home is worth on that loan.
Okay. So those are really good points, and I appreciate you sharing that. Now, we always know that nobody gives anything for free. And this is another thing that I really want to talk about is mortgage refinance closing costs. There are closing costs associated with this. And to Praveen's point a moment ago, when he feels like, and he's absolutely right, to the best of my knowledge as well, a lot of loan officers don't talk about the amortization schedule and the trade-offs and, break-even points and how it really works and resetting the clock and all that fun stuff, right?
Yep.
Nor do they like to talk closing costs. There's too many times that I hear of people that, oh, Andrew, I'm going to refinance my mortgage. It's not going to cost me anything. I was like, that's not the case. It's just not the case. So explain to us why mortgage loan officers will typically go with that approach of saying it's not going to cost you money, when in reality it does cost you money. And explain your thought process a little bit as the professional loan officer that you are when you hear that kind of rhetoric.
So 2 things on this, and this is a really important topic to understand, Andrew. I don't think you and I have even talked about this. A lot of times the mortgage companies that that service your loan, they can offer you a no-cost refinance. And the reason is because they don't want you to go to another company. They don't want to lose that revenue stream. They don't want to lose that 30 years of you paying interest on that loan. They don't want to lose it. So what they'll do is sometimes, and I'm not getting crap for saying this, but their corporate office will call you and they'll offer you a no-cost refinance. And the big thing with that to understand is, yes, that's a great option. However, you have some better options. I had a client, I had it happen at my own personal company. The company I work with is great, phenomenal company, does some amazing thing for the loan officers, does some great marketing. I had a past client who was contacted by our corporate office, offered her a no-cost refinance on 3.25. It was a true no-cost refi, freaking awesome. But she called me because she had the relationship with me, and she goes, "Hey, your company called me. I know I didn't call you. They're offering me this. Can you look at it for me?" I said, "Oh yeah." I was like, that's sweet. That's smoking. But I can do the same loan for you. It's not going to be a no-cost refinance. It's going to be a normal FHA streamlined loan. And I can get you all the way down to 2.75 and drop your payment another $192 a month. Her mind was blown, right? So in her case, and I showed her what the differences were. I said, "Hey, here's your no-cost refi loan. Here's your payment. Here's your new FHA streamlined loan, the same type of loan they were doing for her. Here's the cost of it. It's going to cost you a few $1,000s roll into the loan amount. Here's your break-even point," which for her was like 2.8 years. And it made complete sense for her to do that loan. So again, it just depends on the loan, depends on the program, your credit score. You really want to make sure, if you're working with me, I'm always going to go over a break-even point on a refi. That should be in the initial conversation once a complete application is done and you see if you're going to be paying points, what the costs are and all that. Before you get into underwriting, you should know, in my opinion, as a consumer, what your break-even point is. Because a lot of times buyers come to me and they were never told that they were paying multiple points. Their lender never went over with them the cost of doing the refinance. Cost of doing refinance is relatively similar for, from lender to lender, except for the points when you're looking at buying down the rate, because even though you might be getting a 2.5, maybe you didn't understand you were paying 1.5 in discount points, which a lot of times makes sense, but you should still understand exactly what you're doing and why you're doing it. So
yeah, you're absolutely right. And I'm glad that you're bringing that up because, we made videos about discount points. Celeste and I made that video. And then you and I had talked about online lenders versus, lenders like yourself, right? And we showed the fine detail that gets overlooked all too often. And when you're talking about points, that's one thing that comes to mind. Yes. Is it adamant or is it prevalent rather in purchase type loans? Absolutely. Is it just as prevalent in refinance? Probably more so, because everybody wants to try to make you think that you're getting something for free when you're not. And the person that is literally taking the money to the bank is the bank. So I think it's really important to be clear on that. And I really appreciate you bringing that up. Now, as it pertains to, let's say, and I feel that this might be the case, and please correct me if I'm wrong because you are the loan officer. When it comes to mortgage refinance, how many people typically would you say on average actually end up doing a refinance with their current mortgage service provider versus finding a new one because they saw that sexy marketing? Like Quicken Loans mentioned that they called you, right? So how many people actually do that to be able to benefit from a potential true no cost mortgage, even if the rate isn't as good as what they could get working with you directly, right?
There's a lot of people, man. A big majority of people do that because they see the kind of facade of something for nothing. It's not free, right? You're getting a higher rate to cover the cost of doing it. There's a lot of people that do that. Unfortunately, it's not a bad thing. It's better than staying on your high rate, And again, if it fits within someone's goals and they're like, I don't want to pay a dime for this refinance, well, I tell them like, oh, hey, great, contact your corporate office, see if they can do it for you. But you're not going to get as good of a deal as you would if you were to reach out to a loan officer and see all of the true options and what you have.
And I think that's great. So now when we're talking about a percentage basis, like, it's very easy to say that to purchase a home, your average buyer closing costs are going to be anywhere between like 2 and 4% across the United States. Here in Vegas, it's best to approximate 3%. If you live in a state where attorneys are required, it's best to approximate 4% of a price, right? So when we look at mortgage refinance closing costs, if we were going to assign a percentage for making it simple as possible, what would that percentage be?
So if you're looking at rolling in one discount point, meaning that 1% of the loan amount, which is very typical on refinances, to get those sexy rates. And a lot of times it does make sense to do that if you have the equity. So if you're assuming that plus a normal closing cost of doing a transaction, I always tell people it's going to be around 2%. That's typically what you're looking at, total all in what you're looking at when it comes to a conventional VA, sometimes FHA refinance.
That makes a lot of sense because typically, like we talked about, so here in Vegas, you do a refinance typically about 2%. And that makes a lot of sense because in resale, you're looking at typically 3% whenever a buyer purchases a home. So obviously you don't need a home inspection. You don't need all the same stuff that you need when you purchase a home. There's the other 1% gone. So thank you for the clarification of that. Very much appreciated. Now, going back over to the comment, I saw our friend, Mr. LaRon Hall. Thank you for joining us, my friend.
What's up, buddy?
I hope that you and your family are enjoying a beautiful day and getting ready for an amazing weekend this weekend. So everybody, LaRon is actually working with Bill and I right now to purchase their first and brand new construction family home. So super excited for the Hall family. And here in a few months, we'll be able to give them the keys to their beautiful new home. Super excited for you to come in.
2 months are left, brother, man.
Yeah, 2 months.
2 months or less,
That's coming up quick. So Jay-Z made a comment. And Jay-Z, thank you for joining us, by the way. Jay-Z says, my parents are in a hole for refinancing the house so many times. They are now at a point where they are ready to retire, but owe $160,000 on a 25-year mortgage. The home has $100,000 of equity. Any suggestions?
Depends on what their situation is. Do they need to reduce? Again, refinancing, why would they need to refinance? The suggestion would be to find out why. If they need to reduce their cash, if they need to reduce their expenses and increase their cash flow, would a refinance make sense for them to do? It sounds like they've refinanced multiple times. They still have 25 years left on their mortgage. It depends on why. If we could save them a couple $100 a month and they're going to be on a fixed income, sometimes that is huge for people, right? So if that's a situation, then I would say, Jay-Z, let's chat. Let's find out what they got going on. Let's find out why they want to potentially refinance. If they want to save money, hopefully they don't want to take a bunch of money out of the equity. But again, they might need to pay off debts and lower other expenses that way. So again, I say we definitely got to chat about it and see if it makes sense for them. We definitely don't want them to keep going down that repetitive path of continued refinances. Maybe have this be a last one to do to put them in a better situation. I do know, Andrew, that I've helped a lot of police officers and firefighters and things like that do what's called buying years, right? Just recently I had one of my good friends we helped. He wanted to retire early, wanted to retire from the police department early, wanted to maximize his retirement. So we helped him buy years. So yes, he did a cash out loan. He still lowered his rate, lowered his interest rate a little bit. And we were able to help him get back a few years of his life by doing that. So when it comes to retirement and refinancing, sometimes it does make sense to cash out. It just depends.
Okay, Bill. So you just said something that, if I was an emoji, that mind blown thing, right? You just blew my mind with something you said, because in 7 years, my friend, 7 years of working with you and all the wonderful families we've had the opportunity to work with, I have never heard you say buying years. What the heck does that mean? I'm sorry, but you're telling me now something that I don't know, and it makes me think of some of the comments I get on the YouTube channel from our tribe, and they're like, "Hey, Andrew, can I use the equity on my house to pay off my mortgage?" I'm like, "No, you can't. It doesn't work that way." Totally. But buying years, what is buying years? Because I mean, you can see how easy it would try to be to put that parallel together, right?
Yeah, it's totally different. Totally different. So anybody who is a police officer or firefighter or anything like that, or is on a similar retirement program, and know exactly what we're talking about. But that's where you can take a certain amount of money. You can do what's called buying years. And again, I don't know exactly how that end of it works because I haven't done that, but typically they're going to take cash out. They're going to put it into their retirement to buy years. So if they got to do, say like they got to do 30 years to reach a certain amount of income for retirement, and maybe they're at year 27, they can, instead of going another 3 years and working in their job, they can take cash and they can buy those last 3 years out, if that makes sense.
Okay, now I understand how this works. This is really going to be more of a civil service type position. Correct. Or military DOD position. Yes, I understand what you're talking about now, because in the Marine Corps and in the military, there's actually a way of buying out a contract. It won't buy you out your retirement, but you could essentially buy out your contract given what your profession is. It's not discussed. But look, there's a lot of things there. But as you pertain to it, that's what just clicked in my head. So now I understand. I thought for a moment, so it's important to have the clarity and the context here and the clarity and focus around what you're saying. When you're saying buying years, you could do this with the mortgage. So now it makes sense to me that they can buy years for their retirement for their position, depending on their civil service or government service. So that makes a lot of sense. So thank you for that. Justin, Jay-Z then went on to say, hey, would a reverse mortgage or perhaps a refinance again make sense? And he's talking about his parents, if you remember. So they have a 4.5% rate right now. What would you suggest to them?
Look at both options. And again, ask them why they're refinancing. 4.5, dropping that rate down to maybe, if they're doing conventional, maybe below 3 if they have great credit. It's going to save them a bunch of money every month, right? It's going to definitely help improve their cash flow if they're going to retire and go on a fixed income. Now, regarding reverse mortgage it's not this horrible thing that everybody thinks it is, right? It's not this horrible situation. It's not something to where somebody is going to be stuck. It's not when your parents, the whole idea of a reverse mortgage, a lot of people think is once the parents pass and the family is stuck with this property and it's upside down and all this. That's not the case at all. Just not the case. However, it's very important to understand on a reverse mortgage, when somebody does a reverse mortgage and they actually go through with doing that. I tried to talk to my Nana about doing this a while ago because of her situation. It would have greatly improved her quality of life. However, remember we talked about the why. That was not her why. She can get by on her fixed income. She can live well below her means. And the reason is because a reverse mortgage is going to eat up that equity that you have in the property. Depending on how long the individuals live in that property, they're going to not have a mortgage payment, right? Which is amazing. It drastically improves their quality of life. They can potentially even get income coming in from that property on either a monthly basis or have like a home equity line of credit set up or literally like checkbook that they can write checks from. Again, reverse mortgages are geared 100% at improving the quality of life of the individual that worked their butt off their entire life to put themselves in that situation. So it might make sense for them it doesn't, Jay-Z, it doesn't look like on your message there, it doesn't look like they might have enough equity to really take
100,000.
advantage of that. Yeah, I don't typically,
100,000.
yeah, it's close. I would, we do have a reverse mortgage specialist that I could refer you to that can help you out. We can get things done across the country. That's all they do. They specialize in it because the reverse mortgage is definitely a very niche program. But again, to understand, ask them why they're refinancing. If they're just wanting to improve their quality of life and they're not too concerned about leaving a ton of equity to their, to their kids, then that might be a great option. But if all they're looking to do is reduce the monthly payment, improve their cash flow, and still have that equity there to potentially, help out family once they're gone, they may not want to do a reverse.
Good stuff, Bill. I was jotting down a few notes when you were talking. So JC, sounds like a good opportunity might be to have your parents connect with Bill, and Bill can put them in touch with the reverse mortgage specialist and essentially review their refinance versus reverse mortgage opportunities. His information is obviously up on the screen at the moment and also linked in the show more description below this video. So if that's something that you think would be helpful to them, Jay-Z, please feel free to reach out to Bill. We're here to help and love connecting with you and our tribe and just overall trying to do what we can to help people. So thank you, Jay-Z, for sharing as much information as you did and helping us have a more robust conversation about this and interjecting even reverse mortgages. So Justin, thank you for joining us, my friend. Justin says, thanks for the info. When you refinance your traditional mortgage, are the refinancing fees typically rolled into the new mortgage at the new interest rate, or is it expected as an out-of-pocket at closing?
So great question. Out of all the refinances I've done in 15 years, I don't even know how many I've done a lot. Most of the time, 99% of the time, consumers and homeowners, you're going to roll in the closing cost to your loan. You're going to roll that cost into your mortgage. That way you don't have to come out of pocket. Now it's totally up to you and what you want to do. I did have a client, special lady, very, very set in her ways, which worked out for her because she just paid off all of her homes. Mm-hmm. She refinanced a few times with me because she saw these rates. She was like Andrew, very analytical, analyzed everything, looked at everything, and she never wanted to add anything to her mortgage. But just understand, if you're looking at a $300,000 mortgage, you might be coming out of pocket $5,000, right? You have the option. You can roll it in, or you can pay it out of pocket. Now, if you're looking at doing what's called an FHA streamlined loan, there's a relatively complicated calculation system that we have to use to do an FHA streamlined loan. Sometimes you do not have an option. You're going to have to come out of pocket with at least what your monthly payment is. A lot of times you have to come out of pocket quite a bit more than what your monthly payment is. We just closed on a client yesterday that she came out of pocket a good chunk, but I helped her save a lot of money every month. So again, just depends on everybody's situation. So most of the time you have the option unless you're doing an FHA streamline.
That's good stuff. And I really appreciate those details. I mean, you're making up, you're saying things that are their own specific video themselves that we should create about, like FHA streamline and VA interest rate reduction loans and cashing out of essentially a refinancing out of an MIP. So that's all really good information that we've had the opportunity to share with everybody today. And thank you for everyone that's joining us during the live stream. And if you're catching us after the fact, thank you. And I hope that you have found a lot of value in the video. And if you are getting a lot of value out of the video, of course, I'm going to ask you to go ahead and subscribe so you can get notified of the next streams and the next videos that come out to continue getting the value. And please like the video. And if you know of someone, obviously, that it could help, share it with them. Let's help everybody. So Jay-Z wanted to say thank you, Bill. Thank you, Jay-Z.
You're welcome, buddy.
And Mr. Zoman 1980 said, just refinanced to a 20-year at 2.8% at the same payment as my original 30-year 2 years ago. So good stuff then. 2.8 is his rate. And instead of a 30, he's got a 20. And that is amazing. So good stuff on you, Mr. Zoe. Bill, lastly, as we wind down here and we land the plane on this live stream, do you have any parting shots that you would like to share with us?
Yeah, well, again, guys, just like we talked about in the beginning, if you're looking at refinancing, just kind of pump the brakes a little bit and slow down, right? Don't jump on the first shiny thing that comes across your screen, comes across your mailbox. Call your professional. If you have a relationship with an loan officer, go ahead and give them a call. If you don't, or maybe you want a second opinion, I'd love to chat with you. It does make sense for a lot of people right now to refinance. If you're on the fence, at least get your real options. Don't miss the boat.
Mm-hmm. That's good stuff. And if you want to talk to Bill, here's his contact information. Again, it's in the show more description every time that Bill and I go live. Bill, I do want to tell you, thank you, my friend, and thank you for talking about pumping the brakes. You know, that's that hashtag JTAG, just take a breath to reassess with that calm, cool, and collected head. And, you know, the shiny object, you know, what I'm always making up new acronyms. I'm not sure that I get the credit for this, of course, you know, it's a big world. But the SOS, it's the SOS, the shiny object syndrome. You gotta be careful because SOS, just as it sounds like an emergency, if you get shiny object syndrome, it is an emergency because you might be getting ready to wreck yourself if you don't check yourself. So thank you, Bill, for all of your great information that you've shared today. And lastly, thank you for everyone that stayed with us today. And as we land the plane on this live stream, I just want to share with you, let's always keep in mind to just do what's back here. Stay humble, work hard, and be kind. Together, we are always stronger and better together than we are not. And we can make the world a better place, one person at a time, one smile at a time. So please go out there and be the reason someone smiles today and enjoy yourself a beautiful day, my friend. Thank you.